What's up, guys? Welcome back to Mark's Stock Review. Hope you're all having a great day so far. Today's video is going to be on Workhorse. I'm going to be talking about the current weakness and whether it's a time we should all panic or not. Most importantly, I'm going to be discussing this time of uncertainty, which from my point of view is going to be the single most important thing we should be focused on. And I'm also going to present a bullish case and why I believe there's going to be a buying opportunity. And if you're new to this video, I keep my videos brief with as much information as possible. So if you do find it helpful, please consider subscribing and hitting the thumbs up and bell notifications. That said, let's get right into it. Full disclosure, I do own shares of Workhorse. I started buying around $26 a share, but got my cost basis all the way down to $20.57. This is a great example of why I only put a fraction of my intended investment into a stock initially, and then only buy more if it lowers my cost basis. No matter how much I like the company, I learned this the hard way too many times. And quickly, one more thing. If you look at PLRTF, it's the reason why if I decide to buy an OTC company, it's only a very small amount of money. First, I want to talk about the weakness that Workhorse is clearly experiencing, however, why it's not a time to panic. First off, Ford's press release on November 12th revealing the ETransit, adding to Workhorse's competition. It's going to be available late 2021. Ford already has approximately 1,800 commercial dealers worldwide, 600 in the USA, priced to start under $45,000. The truck's range is going to be 126 miles. Seems low, but they claim that the average is only 100 miles per day driven, so fleet buyers won't want to pay for ranges that are not needed. My really only one concern with Ford is their advantage to scale and keep prices low. They can actually lower their prices even if taking a loss. Then once the competition is eliminated, then they slowly raise their prices back up, similar to what like a Walmart could do. But here's why I don't think there's reason to panic. One, we already knew that competition was coming. And number two, Workhorse still has the first to market advantage if all goes well with the USPS contract. The next weakness is the earnings report, which from my point of view doesn't affect the overall growth story of Workhorse, but does present a short-term headwind. But notice how the revenue is under $1 million. That actually may dissuade some of the bigger investors due to risk restraints, which from my point of view might provide an opportunity for retail investors to get in. And next, the 300 to 400 deliveries are clearly not going to happen this year. However, it's temporary and most importantly, it's measurable. So for those reasons, it's not that big of a concern on my end. And the last bit of temporary weakness I want to quickly discuss is Citron's report on NIO, which does not carry a whole lot of weight, but should be considered nonetheless. So up until now, I've mentioned weaknesses that are both measurable and temporary, so they're not that big a deal from my point of view. However, I do want to talk about two things that fall under uncertainty, which are a concern of mine. First off, short-term projections will be difficult for Workhorse to make, and this is straight from the CEO. We cannot predict the full impact from COVID right now, let alone 2021. It's mostly caused by staffing issues. 36% of production staff out, with the combination of battery supply chain issues, may persuade investors to take a risk-off approach, at least for a while. And number two, the Senate races in Georgia won't be determined until January, and that will determine the balance of power in Washington. And from my point of view, new government contracts and legislation will be at a minimum until at least January. Silver lining is that it may provide retail investors a chance to buy cheaper shares. And now I'm going to get into why I believe between now and early January it might be a great time for investors to get shares at a discount. First off, this is the first time in a while that most average price targets are above the current share price. My price target for adding heavily is between $15.50 and $17.50. The price may not get there because I do believe there's plenty of other investors like myself that believe that this is a great time to buy Workhorse in a time of short-term weakness. And to summarize my bullish viewpoint, the share price is lower than most price targets. There's a healthy institutional ownership to help weather the storm. Catalysts should be coming after the political cloud in Georgia is removed. And most importantly, the long-term growth story for Workhorse remains intact. I hope you found the video helpful. If you did, please consider subscribing. Have a great rest of your day, and I'll be talking to you soon. Take care.